In today's video, I want to talk all about the importance of risk to reward and to ensure that you understand how important that really is to ensure your long-term profitability as a Forex trader. Let me share more with you right now. Hi, it's Andrew Mitchem here, the Forex Trading Coach. Today is Thursday the 5th of December and I'm here in beautiful Queenstown in the South Island, as you can see from the glorious scenery behind me. And this week I've been trading back to just the daily charts again and the 4-hourly charts. And it's a great thing to be able to trade those longer time frame charts, but it's also important to understand that with them you generally have yourself a higher risk to reward than you do on the shorter time frame charts. Generally because the stop loss is slightly bigger due to the technical level it needs to be. The profit target is also bigger. And I find that in general on the 1-day charts, the daily charts, my risk to reward is somewhere between around a 2.5 to a 3.5 risk to reward. I'll give you an example of a couple of days ago. I had a couple trades selling on the daily chart on the Australian dollar, New Zealand dollar. The market order made exactly a 3-to-1 risk to reward and the retracement order made a 2.6 to 1 risk to reward. So two excellent trades there. If you took 1% on each of those, that was a 1.5% gain on the market order and a 1.3% gain on the retracement order. That's if you took 1% on each of those two trades. Personally, I trade 0.5% risk and I trade 0.25% on each of those two positions, but still a great result. 4-hour chart trades also have very high risk to rewards. Due to also the larger stop loss and the larger profit target. But don't forget you can take those, because don't forget the way that I trade and the way that I encourage people to trade is we don't worry about how many pips we make. Each trade has an equal account percentage risk. So don't get worried and concerned that you can't trade these longer time frame charts because you see the stop loss and pips as being too big. It really does not matter. And when you're away like here, why would I want to be sitting watching charts all day when I can trade daily charts and occasionally the 4-hourly charts? Last week, for instance, I took 15 trades on the 4-hourly charts during last week, and I had 10 of them hit full profit and 5 of them were stopped out. The ones that hit full profit averaged around a 1.7 to 1 risk to reward over the 10 profitable trades. So you can see how you can make some excellent trades but without being glued to the screen all day. Yesterday I had a British pound Canadian dollar buy trade. It made 1.6 to 1 risk to reward, so still with a 0.5% risk. That's still a 0.8% on my account just on one trade just yesterday. So you can just see what can be achieved there by having the risk to reward in your favor. Generally the shorter the time frame, the smaller the risk to reward, but personally I wouldn't go in anything under a 1-to-1 risk to reward. I like to have about a 1.5 risk to reward as a minimum. Sometimes it's slightly smaller, but generally not too much. It's important also to set your stop loss based on a technical level and set your profit target based on a technical level. You don't just suddenly say, well, I'm putting a 50 pip stop loss, therefore I have to put a 100 pip profit target. That's not how you trade, because 50 pips may or may not be correct. It depends on the technical level needed for that stop loss. And let's say 50 pips was the correct level. You don't just suddenly double it to make 100 pips just because you want a 2-to-1 risk to reward. You need to put your profit target at a technical place for a technical reason. And if that happens to be 1.85 risk to reward or 2.05, that's the way it is. You don't just say, well, 50 pip stop, 100 pip profit target. That's not how you take good trades and to ensure good risk to reward. So just wanted to make that point clear. Elsewhere, the other things I wanted to talk to you about were, of course, trading daily charts, and you can do that anywhere in the world. I've got clients in 46 countries, so people have got all sorts of different things going on in their lives, from their work to their family to sport, whatever it is, and especially now coming up to holiday season, people can't always be trading 1- and 5-minute charts. And the great thing with the strategy that I trade is you can trade those if you wish to, and I've talked about them quite a bit over the last couple of weeks, and I've talked about the success that I've achieved on them and other clients have achieved on those short time frames. But it doesn't mean to say you need to be staring at the charts all day and night if that's not what suits you, or, for instance, the situation doesn't suit you. So you can take any time frame that is available to you. And that is the beauty of forgetting about trading pips, because you can take those longer time frame chart trades. And it's the beauty of having high risk to reward trades. You see, I quite often get people come to me and say, hey, Andrew, you know, what's the winning rate of your strategy? And yes, it's important, but it's not like critical. And, you know, a lot of people expect systems to have a 90% win rate. And I say, well, fine, go and, you know, trade that type of system if you wish to, but I can almost guarantee that a system that has like a 90-95% success rate in terms of winning trades either has a very, very low risk to reward, probably under a 1-to-1, or it doesn't have a stop loss in place at all. Now, you know, you can trade without a stop loss if you wish, and I know there's people out there that say you should never trade with a stop loss. That's fine if you want to trade like that. To me, it's really important to be a longer-term thinker about my trading, and it's important to have that controlled risk and to know that my risk is controlled at a certain level that I'm comfortable with, whatever that is, whether it be a 0.5% or a 1% risk, whatever that is that suits you. But I know that when I take every trade, that's the maximum I can lose on any one position. And that's a really important thing, you know, emotionally, to be able to keep trading. Plus also sensibly, you know, you don't want to be risking obscene amounts on each trade and all of a sudden the trade goes wrong. So just a few really important points there for you to consider, and it will definitely aid your trading. So that's all for this week. I look forward to talking to you this time next week when I've got some more tips and Forex information to share with you. So this is Andrew Mitchem from the Forex Trading Coach. If there's anything I can do to help you progress with your trading, please don't hesitate to contact me. Email me, andrew@theforextradingcoach.com. And don't forget, there's two webinars, or two different types of webinars that I hold each week for my clients, those who are brand new to trading and those who are slightly more experienced but probably frustrated with their trading. If you've not attended one of those webinars yet, make sure you sign up to them on my website, and I look forward to helping you become a really profitable Forex trader. So bye for now.